Hello and welcome to this weekly podcast with me, Moneer, as your business analyst. A risk disclaimer is in order. Nothing of what we say here is supposed to be investment advice. So please manage your risk and trade responsibly. Trading is associated with risk, and it's important to preserve your capital. Now that we got that out of the way, welcome again. So the Fed finally um, cut interest rates for the first time in 2025 and signaled that it is going to cut rates two more times in 2025. So the Fed actually kind of set the tone for what's coming ahead. And I believe a part of the reason for that easing is due to the weakening that we saw in um, the employment figures. Um, so generally, we are entering a new phase in the cycle associated with easing, and emerging markets have cheered on the news, and several or most indices have actually caught a bid and went up as a result of the signals coming from the Fed. This has been actually a rather a positive year for growth sectors. I was checking the numbers, and technology was among the best performers um, uh, during this year. If we take a look at QQQ, for example, we can see that it is in a clean, beautiful uptrend, no resistance whatsoever to hold it back. It is approaching some overbought territories on the RSI, but mm, this is nothing to be worried about. It might continue pushing up, especially with a support confluence score of 24. This is quite strong, and the numbers here are clean. The trend score numbers are clean. All are pointing bullish, so we can expect further growth ahead. Technology has been performing very well this year, followed by other sectors that are known to be growth sectors, such as such as energy. If we look here at the XLE, we can see a clean, beautiful candle here and a beautiful recovery following this dip back in April. It is recovering ground, and it has strong support levels pushing it up or acting as a cushion to prevent it from ever going downwards. It could still have a pullback or even push down, but the probabilities are more tilted to the upside here, especially that there are no bearish signals on the RSI or the other oscillators here. It's mostly clean, and we can see that it has finished this pullback and now continuing its way upwards. We might face some resistance here at this level at 90.46, but if it pushes through, then the next stop would be at 93.13. So it should be all good, and the upside potential is still definitely there. So technology and energy has been good performing sectors this year, and that signals a risk on sentiment, in that investors are focusing more on um, the easing and the upside potential. We also saw gold soar, touching 3,700 per ounce. And as a result, actually, both big miners and junior gold exploration companies seem to have cheered for the news. Of course, Higher gold prices mean better economics for both explorers and miners. Uh, of course, it depends on the prices. Some of those companies have locked in, so the impact might be delayed. But generally, this is positive for gold. Both gold miners and junior companies. We can see here GDX is also moving in a clean uptrend. Um, Although the last support levels lie a bit far below. So this might see a small pullback, and I saw gold prices dropping a bit today. So there might be some profit taking activities here, but generally the trend is still bullish. We can see the trend scores here, they're still all green. And we might see a small pullback because we also can see that it is in overbought territories on the oscillators. So there's that to keep in mind. But again, the balances are more tilted to the upside here when it comes to gold and gold miners. Generally, in the exploration sector, we have been seeing um, some refreshed activity, some better activity than in previous years. So we might also see some bullish runs in some commodities. Let's look at some companies here before we wrap up this session. The dollar index, or this ETF that is more focused on dollar strength. We can see the dollar is still weak generally. However, I noticed that today it caught a bid. So we might see a bullish candle coming in here after this. This support level at 27.05 here might push the price up. This is a consolidation or an accumulation, depending on what you call it. And depending on further signals from the Fed and unemployment figures and inflation figures, we might see some short term strength in the dollar. But looking at this chart, we can see that there are two strong resistance levels here at 27.53 and 27.35, strong confluence scores. So perhaps this is on this chart, I might lean to shorting any any um, any spikes in the price. So it's still too early to buy this ETF and bet on strength in the US dollar. We're entering into an easing cycle, so the dollar is likely to be weaker as we move ahead. Um, Technology companies such as Meta, Google, and Apple, Amazon are all in the green. Let's look at Meta very quickly. Yeah, a bullish, clean bullish trend. And you've probably seen me and Kevin talk about the cup and handle pattern, and I can see a part of it forming here. So we might see this candle and then a small pullback and then a continuation to the upside, especially given this green support line, strong support line, 20 in terms of confluence score. And still, if you look at the MACD here, that is a beautiful drop and then crossover. That's a bullish signal. So Meta is still a good opportunity to buy if you are a long-term trader. And I think similar analysis applies to Amazon. We can see a strong support level here, and Apple. Apple released the iPhone 17 and it wasn't really cheered by the market, but generally the trend is still to the upside and the balance of support and resistance is still to the upside. So, generally speaking, we notice that we are in good territories. Um, and I still believe that the Fed will look at more data points to make decisions on whether there will be two rate cuts or fewer or more. We'll see. There will be more signs to confirm as we move ahead. But we are still in an expansion part of the cycle. And I noticed that besides the good performance from the technology and energy sector and also gold, healthcare and consumer staples, which are defensive sectors, they have been the underperformance as of late. So again, this confirms that we are in an expansive part of the cycle. So good signals overall coming from the market. It's a good time to find good opportunities and long-term exposure. But of course, it's important to manage your risk and preserve your capital. That is your number one objective as a trader and as an investor. Capital preservation comes first, capital growth comes second. So that's all that I had for you today. If you have any questions or tips, or really any comments or any ETF that you would like us to look at, please leave it in the comment section below, and Kevin or I will take a look at it. And don't forget to join our Discord. You can see us live there or see us respond to your comments quickly there. But of course, as always, trade carefully and responsibly. And I'll see you soon. Take care.